subs 2x, revenue 2x, gross margins growing. What's going on with the stock today, do you think?
Stock going backwards is a bit of a head scratcher, I got to be totally honest. First, I got to acknowledge that I'm following Jamie Dimon. That's kind of the last place you want to be on television. But, you know, one of the most impressive guys on the street. But with respect to our stock trading, it's a head scratcher. We had triple-digit top-line growth and single-digit EBITDA loss and narrowing losses in a climate that people want profitability. For us, profitability is a managed outcome. We could pull back on growth and become profitable tomorrow. Our core U.S. bike business is profitable, so the investments we're making in international, in digital, in new products, in new content, they're all smart investments. We're very excited about them, but even in the face of all those investments, we have narrowing losses. So we're very proud of the team. We think we've done a fantastic job. Our board's excited about the investments we're making, so we're thinking long-term, obviously. What happened today or what happens tomorrow isn't something we're focused on.
I do want to ask you about M&A and international, but the environment you described that has flipped,
yes,
where patience for non-profitability is lessened, obviously. Has it changed any way you're approaching the business tactically?
Not to a large extent. I mean, we are focused on growth and profitability, and for us, it's not either or because our business model is so gorgeous. I'll tell you a tiny little thing. We were considering doing a what's the NFL, the Super Bowl ad. We were going to do a Super Bowl ad, and we decided not to. In this climate, we thought that would not be accepted very well. So on the margin, there's some little things that optically, probably wouldn't be accepted. We bought a manufacturer that we're very excited about. That's going to be very strategic and pay dividends for us as we scale our supply chain and as we try to get cost advantage over any future competitors that we don't have yet. We did not announce that 3 weeks ago, because we thought in this climate, you just don't know, especially when you're in a quiet period and you can't react. So we're trying to be thoughtful, understanding. We're not tone deaf on how the world has changed, Carl, to your point. But we are thinking long term. We're investing in the next 5 to 10 years, and we think we're making very smart investments, and we love, our plan.
John, to your befuddlement on the performance of the stock, given what was a strong quarter, many would agree, was there something you said on the call, perhaps, that gave people pause?
I don't know. It's a great question, David. I was watching the pre-earnings. We were up 6 or 7%.
I know you were.
Pre-market. It's a head scratcher. It really is. The sell side analysts all have buy ratings. They had buy ratings before our earnings release this morning. So you got to think there's even stronger conviction on our performance and where we're going. And there's information asymmetry, as you guys know, with the buy side having a little bit more access to us. So the insiders are very excited. The leadership's excited, the board's excited, the buy side's excited, or the sell side's excited.
Well, somebody's not particularly
somebody's
excited.
Not excited.
They're using this opportunity to sell. You mentioned the hardware part of the business. The software part, in terms of what you can see as sort of sustainable long-term margins there. I know some investors are looking for more guidance on that. Can you give any?
Yeah, so our CFO is trying to guide that we might have some decline in our gross margins and our connected fitness products. Which is fine. We plan to do that as we bring new products to market, just like our Tread. Before it scales, it has less hardware margins. Over time, those things go up. But the interesting thing, as you guys may know, for our business, it's very unique. What we care about is the relationship between the hardware margin and the CAC. And for all-in CAC, all of our sales and marketing is paid for via the gross margin in our hardware. And if we could lower the price over time, in the years to come, and lower the gross margin in our hardware, as long as the CAC comes down dollar for dollar, and we are profitable on day one of that customer acquisition, that's a trade we would make. It would expand the TAM. It would still maintain this relationship. So the percentage of hardware margin to us isn't as important as that relationship and the gross dollars in the hardware margin. So we think we're very smart in approaching these levers, and we're gonna be very smart and strategic in the years to come.
International. You've been in the UK and Canada for a while.
Yep.
Launching Germany this month, which is first non-English?
That's right, Carl, which is a fun one for us, which is exactly, we're hiring German nationals to coach out of our London studio. Back to our content investments, we're putting $50 million in a new facility, a content creation facility, 4 studios under one roof here in New York City. Another one in London, where our German instructors are going to teach out. We just, in the coming weeks, we'll announce a couple of the German instructors. But you're right, Carl, the platforms in German, the The bike interface is in German, the website, the content, the music. It is going to feel very authentic to the German market, and it is our first foray into a foreign language. I will say, with respect to Canada and the UK, those markets are out in front of where we were, way out in front of where we were at the US at the similar time. And as we track it, as we invest and then come into profitability in each new market, but they're also ahead of expectations. Both Canada and the UK are way out in front of our sales expectations. Kevin Cornell, our MD of International, and his whole team are crushing it over there.
You mentioned the idea, at least, of doing a Super Bowl ad briefly, which you dispatched with.
Yeah.
But I'm curious about your overall marketing and where you see the most effective way to get the both brand building and customer acquisition.
Yeah, so a beautiful thing about being direct to consumer, David, is we control our destiny. We can open stores, we can do television marketing, we can do direct mail, we can do this multi-channel marketing formula, and we might open a new store. We just opened a new store in Des Moines, Iowa, or we might run a new TV spot in Sunday Night Football. And that the give and take between which one performs on a marginal dollar basis over time in that whole formula is very fascinating. We have PhDs from MIT in mathematics sitting on multi-channel attribution models in the cloud, understanding how to spend a dollar. So another beautiful thing about our business is the predictability of the revenue. We know how to grow and stick the landings on what we tell the street and tell our board and our investors that how we're going to grow. Not only is the recurring revenue or the subscription very predictable, the actual hardware sales are incredibly predictable as well. So it's a beautiful business in that sense.